sector. So for that reason, I just thought I'd start out by very quickly sort of running through our base methodology that we use in order to be, as we like to say, the contemporary equivalents of the medieval watchman that stood on the turret of the castle and sort of scanned the horizon looking for the marauding hordes and what's coming next. So like most agencies or most people that work in the features foresight space, we use one of the little acronyms to try and hang our scanning techniques into. Now, the sort of acronym that you use doesn't really matter too much, whether you're using a pestle or a TPCs or whatever it is, but it is helpful to start categorizing your trends into different buckets, whatever those buckets may be, just so that you are making sure that you are covering a lot of ground. So if you're just looking at everything, it can be quite overwhelming. So it does make sense to try and segment it, even if it's just to break up the workflow, depending on how big your team is. So the acronym that we've developed is TRENDS itself, TRENDS, as you can see there on the screen. T for technology, R for retail, E for economy, N for natural world, D for diplomacy, and S for socio-cultural. So what makes our model a bit different to most of the pestle, TPCs types models is that green segment, that retail segment, which we put in specifically because so many of our clients are in the private sector working in the corporate space. So that R in our trend scanning wheel that you can see on the screen there really relates to business model change. So things like the subscription movement, for example, would be put in there. It's how businesses connect with consumers. So more microeconomics, something that our clients have direct control over, as is in contrasted by economy, which is more classic macroeconomics, the economic environment that our clients don't have control over. So that's really the key difference between our scanning methodology and the more common ones you'll hear about. And then diplomacy is probably also worth just mentioning quickly, because diplomacy, we really pile everything in there, including geopolitics and law and order and governance itself. Because once again, that's all external factors to our clients. Mostly in these scanning models, people will break out law with geopolitics, but for our purposes, because it is an external factor, it makes more sense to focus more on the R for retail and the S for socio-cultural, which is something that we have quite a lot of work that we do. I won't go into that too much tonight, but what we also do as part of our socio-cultural, that sort of purple segment on the screen, is we have quite a robust body of work in tribes that we do at our agency. So tribes really looks at consumer groups, but unusual consumer groups. So the one that I've been speaking about quite a lot this week is the Lushkin culture, which is something that's unique to South Africa, but it speaks to conspicuous consumption, which is quite interesting considering all the sort of macro trends going on at the moment. And Lushkin culture refers to people actually part of the very lower echelons of our socio-economic plane in South Africa. These are people who are living just above the breadline in informal settlements, but in an ability to try and show their dominance within their tribe or within their community. They actually burn things like money or expensive shoes, things that they actually can't really afford to lose, to show their power and place in society. So that's just one example of a tribe that we'll put in. I'm not going to be going through our tribes work today, but if you want to invite me back, I can always come and show you some of the tribes we have been collecting. We've been doing this for many years. We've published a couple of books on it, but that's a sort of a sub-segment of the work that we do. What I'm going to be taking you through tonight is what we call our State We In briefing that we put together every January. In South Africa, our parliament puts out a speech called the State of the Nation, also around about the same time, the end of January every year. So this is our sort of answer to that, looking at everything else going on in the world, not just the D segment that our politicians cover. So we put this briefing together every year, and we pull out the trends that have resonated the most with us and that we think are going to have the biggest impact on the organizations that we deal with. But just before I get into that, and I just pulled the sort of highlights out of our 2021 briefing for you, just to illustrate how that all comes together, I just thought I'd quickly go through a little bit more detail on the methodology that we use. In terms of the sort of spiderweb wheel that we've put together here, we try and look at our trends in terms of 5 minutes means it's happening right now. 5 months means it's going to impact our clients within their next strategic planning cycle. 5 years means they should probably be thinking about it when they get their executive board together and are planning their next rollout of their next projects. And 5 decades, which becomes more speculative. And that drags us from the world of trends, because a trend is something that is already in play. There's already precedence for it. It's popping up in multiple locations, in multiple different guises, and can be categorized then as a trend, from the world of trends to the world of futures. And the world of futures is much more speculative. So I'm sure many of you have seen the futures funnel before, but I thought it's worthwhile putting it out there to see how our sort of trend wheel maps onto it. And of course, the future does tend to sort of get more fuzzy as we look further ahead, much like you're sort of looking through a window of a car at nighttime, your headlights only shine so far on the road ahead of you, and it sort of gets more fuzzy as things branch out. That's what the cone refers to. But at the same time, we also have a tail-eating snake going on in terms of the past, because the past also gets more fuzzy, particularly in our digital age, when history is no longer set in stone or fact. With the age of deepfakes, we can literally rewrite history as and when we like. And we know that this happens. And that's why the past becomes just as unclear as the future does. But it's very important to try orientate ourselves both in what could be happening ahead and in what has happened in the past, because then we're able to start to see how deep those trends are that we're tracking really are. And the further back you can see, the further forward you can project. Even though we can't predict the future, we can, as you can see on that diagram there, make a pretty good assumption of what is probable if the current trends progress as they are currently. And then we can sort of broaden our cone to sort of take in what's plausible. In other words, the sort of bounds of like what could happen or could not. So looking at, say, the US elections, it was plausible that both Biden or Trump could have won. So you kind of want to speculate across that whole realm of what could be happening, even if you do have a view as to what is more likely. And then, of course, you need to broaden it even more into what's possible but unlikely. Things like alien invasions you'd put in there. That's where your gray swans and your black swans and everything live. That's where we should have been thinking about things like COVID before it happened, because it was something that could have happened, but not necessarily something that we had to plan for, but more something we should have had in the back of our mind from that watchtower when we are scanning the horizon. And then most important, of course, to just bear in mind as I go through all these sort of trends that I've compiled for you tonight is what is preferable, because what is preferable is not necessarily what is most probable. And what is preferable is the future that we want selfishly to direct the world towards. Bearing in mind, of course, that what is preferable for me is not necessarily preferable for you. But since we do work with corporate clients, our aim as a trend analysis agency is to help our clients work towards their preferable, most profitable future. So avoid the mistakes, to spot threats, and to take advantage of opportunities, to sort of bend the future to their will. And of course, because we do work in a sort of capitalist society, that's the very sort of cynical role that we do fulfill in the whole sort of corporate ecosystem. And then, of course, you can see that the sort of trends that we're talking about today mostly are going to be the ones that fit into that next strategic planning cycle. Those sort of 5 months, you can almost call them fashion trends, things that are current right now. But they're much deeper trends too, sort of the more sort of macro or civilizational trends that you can talk about, those secular cycles if you're interested in that, or the fourth turning type analogies. Those tend to extend a lot longer into the long now. We're not going to be going into those too much tonight, but definitely if you want to become a good trend analyst, a good futurist, you have to understand those macro civilizational trends, because it makes the micro trends that much richer and places them in context. That's what helps you to pull out what are important things to be talking about, even as they are urgent, rather than just things that are going to be interesting today, but not particularly interesting tomorrow. So let's get into the sort of very high level version, the summarized version of the state we're in that I've prepared for you tonight. And then we can take questions, and you can let me know if you agree with the things that we've pulled out as that what we think is the most interesting things that we've been tracking for this year right ahead. And of course, since it is 2021, a lot of the things we talk about are going to be contextualized in what happened with COVID, because it has fundamentally sort of shifted our trajectory from one probable future to a slightly different one. And we titled this briefing, Lessons from the Great Staggering, Reassess, Rethink, and Recalibrate. So we called it the Great Staggering because we're sort of stumbling into this new post-normal, which is very well illustrated by this poor Catholic priest wearing his mask on the top half of his face, which is quite unusual today, trying to drive through confessions because he wasn't able to get up close and personal with his congregants in his confessional booth. And I just do think that he's quite symbolic of the new post-normal that we all find ourselves in, how everyone has had to adapt slightly to figure out how we're going to play with the new tighter creative brief that we've all been handed. And of course, many people have adapted quite well because, as Terry Pratchett, one of my favorite authors, likes to say, a body can get used to pretty much anything other than being dead. So we do tend to adapt as individuals, as societies, and as organizations. But to start with that first pillar in our web, that of technology, what we really have noticed over the course of the last year and what is changing right now is that what has happened with our lives being forced into a virtual environment, thanks to COVID lockdowns, we have been connecting more, using more digital technologies. And a lot of these technologies that have been, as we said, sort of in the rearview mirror, have been accelerated. They've gone from being quite strange and futuristic to becoming a part of our lives. So as we like to say, objects in the rearview mirror are closer than they might appear, and things that have been almost here for quite a long time have suddenly arrived. And if you want to talk about robotics in particular, that is the one that we think is really going to be changing things now over the next 12 months. We've seen a lot of the sort of more virtual technologies already take place over the last year. That would be the acceleration of things like virtual reality and artificial intelligence and algorithms, and all of those things were very much part of the 2020 conversation. But now we're getting into the world of sort of physical robotics, something that people said was going to take quite a long time, but it's been vastly accelerated, even down to sort of replacing the animals that we get to see in the zoos. Like you can see with this poor robot dolphin over here that's being used for both therapy and for tourists. Already, that's happened over the course of the last year. So robots are very much suddenly walking among us. So over here, you can see just a collection of different robots that are popping up in all different places, not just in first world places like Dubai, which has had its robo-cops for quite some time, but even where I live in South Africa, we've now got a fully autonomous hotel called the Sky Hotel in Sandton, which is quite close to Johannesburg, where I live, where robots are able to serve people in a third world developing country. Same with Mexico. You can see over there a robotic doctor. Egypt too. You can really see that suddenly robots have gone from being something in the movies to something that we're actually integrating into our lives, which is quite interesting. So we kind of seeing it as the year of automation, and automation of physical things, not just of virtual things, which taps into a slightly bigger trend that we've been tracking in terms of what's happened with things like the stock market. A lot of investment has obviously poured into the financialized, virtualized world, but sooner or later, all that virtualized businesses, all those big platform-based companies, your Googles, your Facebooks, all your FAANG companies, have to also catch up with the real world growth, because the virtual economy, that platform economy, is an accelerator, but it's not actually a builder of real value. You can see them almost as a bazaar. They require other people to bring goods and services to sell in them. So we're going to see a pullback into the real world, which is why real world robotics is an interesting trend to track here. We can even see how Bill Gates and how Amazon and Google are all investing in real world land and projects, particularly in the energy and the food security sector. So how this sort of virtual technology is getting real again is the sort of bigger trend going on underneath this. But if you want a bellwether, as we like to say, and here we talk about the sort of signposts that say this is happening now, when it comes to automation, one of the big ones we picked up is that China has just built its first AI expressway. So this is a roads network, a large highway that has been built just for autonomous vehicles. And the highway itself was also built by a lot of robotics too. It wasn't built by hand as things were done in the past, which shows that self-driving cars have gone from something that, oh, it's never going to happen, Elon's never going to get it right, they've killed more people than they've been able to transport. Suddenly, an actual network has been built and it is being used. And this has happened sort of while we were sleeping over the course of the last year. So definitely on technology, we're seeing technology getting real as being the one thing I can pick out for you tonight. Moving on to the retail and marketing segment and how we're looking at it there. The thing that we've picked up is that the circular economy has gone mainstream. So this is a bit of sort of more macro context into what I want to get to tonight. We've been picking up loads and loads of case studies of things like Loop. We're essentially looping back to getting the milkman who used to come and fill up your milk bottle at your house. Now we're able to have a whole lot of more recyclable products. Everything has become much more eco-conscious. We're all very, very aware of what's going on in the whole sort of climate crisis and the sustainability issues of the way that we've built our economies. So we've seen so many different startup business models involved with circular economics, but on a much more sort of micro level, making sure the goods and services are recycled and shared and reused and repurposed. Especially you can tap in here also to everything that's going on with the sort of sharing economy. So like your rent the runway type businesses businesses that allow you to access goods rather than, indulging in conspicuous consumption and throwaway culture. Like I was actually speaking about earlier with the whole Lushkin thing too, also kind of ties in here to say that circular and sustainability is underpinning a lot of the trends that we're seeing in this space. But the big one that's come out, that's had its breakout moment this year in 2021, is the rise of v-commerce and metaverseonomics, as I'm liking to call it right now, as has culminated this week with the fact that old Jack Dorsey has sold his first tweet for what's it, like $1 million as an NFT on the blockchain, which is very, very interesting. That's just the sort of signposts that are going on in terms of the metaverse, but it's also reaching quite interesting tipping points here too. So London now has its first degree in digital fashion design that you can take on, where you're designing clothes not to be worn and discarded and ending up on a landfill, but rather designing virtual goods to be sold and worn in virtual environments. So all your big fashion houses were not just doing their sort of runway shows via Zoom. They all started looking at ways to integrate their products into gaming environments. So like Valentino putting together garments for Animal Crossing, for example, is a great example there. Lots of big brand launches have taken place in gaming platforms. And it's not just real world brands that are doing this. We're also starting to see designers designing specifically for this environment. And what's interesting is when you connect this trend with what's going on in the circular economy environment, you can see that this is a way for us to have conspicuous consumption without overshooting our sustainability bounds. So when you sort of marry those two ideas of both sustainability and digital scarcity / abundance together, you can see there's massive, massive opportunities for new businesses to take place in this metaverse. So the other great example I love to use here is the whole thing of unreal estate. So, they say land is the one thing we're not making more of. Well, in the virtual environment, we really are. So we're seeing people trading real money for virtual land, for virtual property, and even hiring, once again, real interior designers to design your virtual house within your gaming environment. So the trading of digital goods is going to be absolutely massive, and it has had its breakout year. So when we put this presentation together, the whole NFT thing hadn't quite broken to the surface, but it's very much having its moment. And watch this space, because the metaverse is where a lot of young energy, a lot of young talent is pouring in right now, and the money is following it. To sort of look at the bellwether here, once again, that's sort of one signpost that kind of draws this all home, both in terms of the circular repurposing side of the economy and in the value of the virtual economy. We picked up this case study of the Carytown Mall, which is a massive mall. It has I think it has about 1 million square foot of space in there. And during COVID, they went bankrupt because the real economy was obviously squashed quite a lot with what happened with lockdowns and economic constraints. And what has happened is that Fortnite, the gaming company, has bought that mall and turned it into their headquarters or into one of their various office spaces, which is quite interesting to see how that digital economy is taking over the real world, even as real world players, that would be us, Ready Player 7 billion and whoever we are to go play in the metaverse, are starting to spend real money and real time in their environments. So that whole sort of switcheroo from the virtual to the real world was quite interesting when you want to see how this trend is kind of driven home there. To move on to what's going on in the economy, other than gross inequality and everything else, what we really picked up on here is this whole concept of donut economics has exploded into consciousness, both on the corporate space and on the international stage. So this also speaks to that whole sort of circular economy, loop-based, zero-waste economy trend. But donut economics, for those of you who aren't familiar with the term, goes deeper than that. It comes from a British economist by the name of Kate Raworth, who speaks about how economic models of the future should be optimized around sustainability rather than around growth, which is quite a big switch from the way our economies have been managed before. And the donut image that she uses to explain this model is saying that our economies need to be sustainable on two levels. Referring to the inner hole of the donut, she refers to the sort of floor below which no human being's living standards should fall. They basically made up of the UN sustainability goals, things like access to running water, basic living standards, housing, education, a basic standard of living, but which no human being should fall. The outer ring refers to our ecological bounds, which we should not overshoot. So she says our economy should be optimized within that donut level. So on the one hand, sustainability is great. On the other hand, wearing my futurist hat, it's quite difficult to get people excited about degrowth. It's not very inspiring to tell an 18-year-old you're going to have to make do with a slightly lower standard of living than your mum had because your mum ate your share of your natural resource endowment. So we have to be looking at ways to grow our proverbial donuts rather than just sort of operate within it if we want to get people to buy into these ideas sustainably going forward. But again, inequality and ecology, when it comes to the economy, are those two things that we have to bear in mind whatever we deal with. And in terms of inequality, we can see this in the real estate markets too. Again, seeing how the bottom end of the market is turning over a lot more properties, but the middle segment of our society seems to have pretty much disappeared, which from a commercial point of view is quite interesting. So you can either sell to the really rich who've got a lot richer, or to the growing number of much poorer people who are struggling on the edges of the economy. If your business is targeted at that middle segment, the missing middle, which is a South African trend that we've been talking about also for years and years, seems to be becoming a global phenomenon. Definitely something worth thinking about. And we can see that, of course, politicians and policymakers are responding with things to try and reduce that inequality. Things like proposed work from home taxes or unrealized capital gains taxes, all attempts to try and optimize that donut a bit more equitably going forward. But in terms of the sustainability side of it, we start to pick up a few interesting patterns, how sustainability has gone from being a political ideal that has been pushed by activists and ecologists for quite a long time. What's shifted now this year in 2021 and will continue to shift for the rest of the year is the capitalist case, the cynical capitalist profit-driven case for ecology. And we've seen a few different case studies we can bring together to sort of point the direction in this trend. The one would be how we're now selling water futures, for example. So, actual resource endowments have become investable assets, pointing at scarcity ahead, but also the commercial opportunity there to preserve those assets, which is quite interesting. And the other one being sustainability-linked loans. Here we're talking about how businesses are tying the interest rates on their loan repayments to their ability to meet their sustainability targets. That means that a company is willingly setting themselves up to say, if we fail to meet our obligations for society, we will take on additional costs. So it's sort of putting self-imposed carrots and sticks in place, the commercial incentive there. And also banks like BNP Paribas, I think they put together, like they're not actually offering loans to companies who are involved in the fossil fuel trade, which is very, very interesting. So sort of capitalists going after their own. This is no longer just sort of a fuzzy wuzzy thing that we need to do because we're responsible and because we love each other. Rather, we're seeing that sort of tipping point where ecology has become good business sense. And again, the bellwether we picked up here was the case study from Australia, where the young man you see on the screen actually sued his pension fund for not taking enough mitigating action to protect his future investment against the economic risks of climate change. Not to say that he sued them because they weren't doing enough to save the planet. He sued them because they weren't doing enough to protect his portfolio from the disruption that climate change would do to the various assets that that company was invested in. He was basically saying that investing in fossil fuel companies doesn't make good investment sense, which is very interesting in terms of a commercial tipping point on the ecology question. Moving on to the natural world, what we really have seen to sort of set up the context here is that in many ways, nature has been kind of fighting back at us. So if we cast our minds back to this time last year, we had those raging fires going on across Australia. We had, of course, coronavirus, which came out from human contact with animals. We're also seeing evidence to show that people that live close to goats, that's why there's a goat on the screen there, have something like a 50 to 80% higher chance of getting pneumonia. So we're starting to see like our incursions into nature are directly impacting on our quality of life. And then we had the locust plague that has swept across Africa and has been absolutely devastating that no one's noticed because everyone's been so preoccupied with what's going on with COVID. But there are a lot of signals going on to say that nature is fighting back on us as we start to push into it and overshoot our bounds. And that becomes quite interesting once again from a sort of trend and commercial opportunity that spins back out of that. How we're starting to see that once again, the business opportunity is coming on board for us to start to behave a bit better. So some of the things that are also reaching tipping points right now are plant-based alternatives to building materials. You can see the mushroom-grown bricks over there, which is quite interesting because right now we're running out of sand for concrete for our buildings. I'm not sure if you're aware of that, but we've been building too much stuff. And plant-based and lab-grown alternatives to meat are another big trend that we've been tracking, something we get a lot of resistance from in South Africa, because the one thing that unites everyone, all the different ethnic and demographic groups in South Africa, is a love for eating meat products. So we are like aware of this trend, but we understand that it's reaching a point where people, even here in my very, very meat-loving country, are starting to take these alternatives seriously. So looking ahead, of course, can we eat animal products? All our grandchildren look at us the way we treated animals, the same way we look at our ancestors as the way they treated different demographic and gender groups in the past. So things like animal rights, things like nature rights are gaining traction. So we've even got to the point now where international bodies are considering making ecocide an international crime, the same way that genocide is a crime. And in terms of the tipping point or the bellwether here, the Unhuman Development Index says that there are now we've got more weight of things on planet Earth that have been made by man than we have natural things on planet Earth. We have converted so much of nature into steel and concrete that our stuff that we've made now weighs more than Earth's natural endowments, which is quite extraordinary when you start thinking about that. So that's quite a scary tipping point, but the sort of opportunity and the threat there is that we have to find ways to work more sustainably with our environment, or think more radically about how to, extend those bounds by maybe shooting into the stars and getting involved with sort of space capitalism, which people are starting to look at. I won't go too far deep into that, but that whole sort of clash with nature is very much what we're looking at in the natural world pillar. To move on to diplomacy, the big thing that we're seeing right now is the breaking up of the internet. The open internet was nice while we had it, but our kids are not going to know what we're talking about when we speak about it. The World Wide Web of Tim Berners-Lee, where he was talking about, open clicks for everything, is definitely under threat. We all know what happened in Australia, where the government wants people to pay to link to businesses. So that's almost like, a chip company, for example, wanting a television channel to pay them to feature their products in their shows, which is really quite extraordinary how we started changing that. But more than that, we can see that even the way our social networks are structured and contained, it's becoming more closed. So we're seeing closes happening both voluntarily and also top-down from governments. So from a top-down perspective, we're starting to see different nation states putting up different firewalls. So there's basically different internets. You don't have one global internet anymore. You have China's got its internet, the EU's got its internet, South Africa's got its internet. We're all not quite allowed to access the same stuff. We've all got slightly different rules, slightly different filters, and it's more complicated from a business perspective. You're not doing business with one World Wide Web, you're doing business with various different World Wide Webs with different protocols and different rules in place. At the same time, on a more voluntary basis, we're seeing the move away from open social networks to closed ones. People are spending less time on Facebook and more time on places like WhatsApp or Telegram or Signal, closed groups. Less time on Twitter, more time on Clubhouse, which is once again closed groups, not open groups. So this whole shift to a much more fragmented, balkanized World Wide Web is the one thing to look at there. But the same trend is playing out in the geopolitical space, where we're seeing a re-balkanization of the world. So a lot of the sort of trends towards globalization have been reversed, have been accelerated over the course of the last year. So the sort of trade wars were the sort of early signs of this, but the world really is balkanizing, and the globalist, neoliberal, capitalist, open world sort of ideology has been shown to have some problems for some people, because the globalist project really does offer a trade-off between efficiency and resilience. Efficiency comes with open networks and with globalization, but resilience in times of crisis is then compromised. And we've seen the effects now with what's happening with the global shipping networks, how shipping prices are going exponential right now due to both political sort of engineering and geopolitical gaming, and also due to actual constraints that have happened over the course of the last year due to the COVID fallout. So a more balkanized world is sort of threat there, but the opportunity is to build more robust regional supply and value chains that will, help us to trade off more in terms of resilience and perhaps give up a little bit in terms of efficiency. But that's the trend that we're seeing right now, a more fragmented world from a geopolitical perspective, from a trade perspective, and from an internet perspective. And in terms of the bellwether there, we can really look at what's happening with vaccine passports or vaccine apartheid, if you want to be a bit more dramatic there. And the great example that we could give you there is Israel's freedom bracelet, which looks an awful lot like an ankle monitor that criminals used to have to wear when they had done something naughty or were released on parole. This is now the freedom bracelet that you're allowed to wear if you've got a vaccine. So we're starting to see the sort of our freedom of movement is linked to different sets of behavior. And even in the UK now, international travel is illegal unless you've got a pass letter from your government saying why you're allowed to go or what your reasons are for traveling. So a much more fragmented world is what we're seeing right now, and vast differences between countries that are able to open up quicker due to more efficient vaccine rollouts than other countries, but huge, huge differences in terms of freedom of movement and freedom of speech and freedom of trade going forward. So we have to sort of see that we're seeing a pullback on decentralization to a more centralized, more balkanized world on the diplomatic front. And for our last pillar, when we look at what's going on in the socio-cultural world, it's a bit more fun. What we're starting to see on social networks in terms of influencers is we're seeing a shift on our key opinion leaders, that's the KOLs, from being people that were sort of obsessed with very superficial things, the stereotype of the influencer and those terrible TV programs that mock young people for trying to earn a living from looking pretty and putting on makeup. But there's nothing wrong with that at all. But we're definitely seeing a shift in influencers away from pure aesthetics to much deeper causes. So one of my partner's favorite ones to track is what's going on with the K-pop stuns, as they sort of like ganging up on people that are doing social injustices across the world. You don't want to get on the wrong side of the K-pop stuns. They're not just supporters of, pop groups. They also have a huge sense of social justice, and they will absolutely fight for causes that they believe in. And then all the way through to activist fandoms. So to young women who are using TikTok makeup tutorials to actually advocate for women's rights in the Middle East, for example, or the lady you can see on the screen over there who has made a name for herself, being an activist for nuclear energy as an alternative. So she believes that nuclear energy is green energy, and she uses her platform and her attractive looks to get people to buy into the idea of using nuclear power as a viable alternative to preventing further climate change, which is really interesting to see how younger people are using their platforms for political ends much more, and be very, very active in using their space for more than just self-promotion. So we think that's a quite interesting trend, because it picks up on what we look at a lot, again, with the tribes and younger people, and how Gen Z does seem to be much more politically engaged than previous generations, mainly due to the fact that they have access to so much more information that other generations had at their age, not because any generation is particularly different in mindset than another. But it is definitely interesting to see how young people are stepping up and leading a lot of the next wave of change, which does speak to both edges of that donut that I spoke about. But the sort of flip side of that is that these sort of stuns and these sort of more activist influences do tend to create tribes around them again. So it picks up again on that trend of the more sort of closed, the more siloed pockets of the internet. And that sort of internet analogy also translates into the real world, where we've definitely experienced and are still experiencing the year of the yurt. In other words, the little pop-up bubble that we have to sit in, whether we're going to a restaurant or playing in an orchestra, like that poor musician you can see in the green tent in the middle there. And that sort of shows that social isolation and that physical balkanization is extending into our socio-cultural spheres of life, not just into our geopolitical spheres of life. So pods and small spaces and less physical contact with other people. And the sort of bellwether that we can pick up here is what's happened with, of course, the now global phenomenon of hikikomori, which is the phenomenon of young people retreating more and more into their digital lives, into the metaverse, into virtual living spaces rather than physical spaces, not just because of lockdowns, but also because of things like social anxiety. And mental wellness is one of those big ripple effects that we're going to be experiencing as a civilization going forward for some time now. And the sort of trend, or the signpost that really drives that home, is that there was a piece of research that came out last year that said that 1 in 4 millennials, that's people about my age, don't just have no friends, they have no acquaintances either. That's an absolutely shocking statistic when you start thinking about it. And although it's a social real challenge, we're also seeing the massive opportunity in the business of solving for loneliness, as we can see from like the Bumble IPO, for example, which is all in the business of trying to connect people in an increasingly disconnected, fragmented, balkanized world that really extends through all the different layers of our societal hierarchies. And that is the very high overview of the state we're in according to Flux Trends. So I'm going to stop sharing the screen now, and you're welcome to ask me any questions that you have based on what I've just shared.
I'd like to hand that over to the class to start. Is there anybody who wants to offer up a question? Anyone have a question? Alyssa.
Hey, first of all, thank you so much. That was wonderful. Something that I was wondering about is the trend towards like more time like in these digital spaces, in these metaverses. And I guess it's like the next logical step in my mind, especially it's like with that last point of looking at futures where there are less friends and less social circles, of the potential for the rise of like intelligent AI as intelligent like conversation bots. And I'm wondering like what your thoughts are on that.
Yeah, that's definitely happening. And in terms of chatbots, they've got a lot smarter over the course of the last year too. When we started like looking into what was happening with like AI friends, that was probably right about sort of 2014, 2015. Already you had like your Microsoft's IOC that had many, many friends. We've now seen people that have gotten married to digital avatars that have actually has happened, which is quite extraordinary. But with advances, particularly what's happening right now though, is it's gone more from sort of like virtual chatbot space to a more voice-based chatbot. And that seems to connect with people on a more sort of human level. So it started off, of course, with like your Siris and your Alexas and your Google Homes, but the voice-based internet has had a massive year over the last few months, and like Clubhouse is all part of that whole thing. But it's a more natural way to communicate than through a screen. So we're pretty sure that's going to see deeper relationships as those technologies become smarter with technologies as we go forward. And in terms of sucking ourselves into that metaverse, where it gets interesting is when we can start to have chatbots based on real people. So on a lover we might have lost, that might have broken up with us, we can use their digital footprint to sort of replace them so they can continue being your boyfriend even if they've broken up with you, or with family members that have deceased, very much like those Black Mirror episodes. The technology is all there to do that. These patents have been set up, and we can start to do these things. And that becomes very, very trippy, especially for people that are lonely, that don't have any friends or connections. That sort of fake friendship, although it doesn't feel fake, it feels better than being entirely alone, is a very interesting place to be. And that's where we can sort of be sucked into our digital lives. And I've got a friend, colleague, Dan Fagella, who talks a lot about that and about the sort of, as he calls us, lotus eaters, people that give up on our physical lives because our digital lives are so much more fulfilling. It's where our wealth lies, it's where our time is, it's where our friends are. Even if they're not real friends, they feel real to us. And the dangers there, of course, is that it goes back to the inequality question and the platform economy question, because all these digital spaces are owned by businesses. So like, even if you look at economics, like old Adam Smith from like the earliest days of economics warned against landlords and unearned incomes and sort of gatekeepers between us and the things that we need to connect and to survive. So we do have to be quite careful in terms of these digital environments. They are run by platforms, and platforms are digital landlords. So essentially our digital lives are quite fragile, because what platforms give, they can change the terms and conditions on, not just for other businesses, like in the Google, Facebook, Australia story, but also for users like you and I. And that digital fragility of building our life on someone else's turf should be give us pause for concern, like even what Google did just the last couple of months, where they went from allowing you to store unlimited things in Google Drive to saying, unless you pay us, you're going to lose your digital heritage. So, like imagine that those same things happen once you've built an avatar and a life and a home and a business on a platform. So anyway, those are sort of a few thoughts there, but it's very, very tempting to get sucked into that, particularly now when our physical lives are so constrained and not particularly exciting.
I want to add to that point you were making, Bronwyn, and how we might see these signals earlier, because a lot of things you talk about the acceleration that COVID has brought about, and what that question just sort of brought out are looking at what the value of things are. And so, in the case of these NFTs and the art market, we saw actually with the Christie's Banksy sale of Girl with a Red Balloon and the shredding of that artwork, is that narrative was already that tension was already there in terms of, but we're sort of seeing a lot of things sort of sped up. But the question is, the question still remains is what the value, like everybody is concerned with. It's the shift from a physical economy to a sort of experience economy. Is this sort of like, the more abstract sort of things you can't sort of touch, people want more, but that is sort of a pursuit. It's not necessarily a landing. So do we land at any point in terms of really having a sense of what the value of these things truly are, or are we simply just commoditizing them? I mean, I add one other quick point to that is the concern is, does everything become valued by how well it sells? We have everything as a Marvel comic movie and we don't have any art films anymore, or do we have, or it's like how is the value of things going to be driven going into the future in your mind?
Yeah, that's quite an interesting question. In terms of value, there's a massive distinction between value and price. And what we have seen is that we've been pricing a lot of things that previously had just intrinsic human value. And what we're really seeing is sort of a devaluing of actual human experiences. But from my perspective, I think this comes back to what I was trying to talk about earlier in terms of the real versus the platform and the financialized economy. The financialized, virtualized, sort of purely tech-based economy is based purely on our sort of belief in it. It's got value because it has social value, because we kind of believe it does. But what really has value in the world is the real world, once again, the fulfilling of basic human needs, which we have neglected to our peril. And, we can fulfill a lot of to a certain degree. So you can kind of get like 80% of what you get in the real world virtually, but a lot more efficiently, a lot more effectively. So we sort of pivot towards that. We want to commodify things. That's how you get scale. That's how you get VC funding and all the rest of it. But there's certain things that we can't automate. So yes, you can have a virtual girlfriend, you can have a virtual life, but it's not as fulfilling as having a real relationship with the flesh and blood human being that actually wants to be in your bed with you, to put it that crudely. I mean, like there's a different experience going on there. We have irrational human needs that have to be fulfilled at some point. And when we neglect those, that's when you start to see the crises of things like increasing suicide, increasing loneliness, increasing depression, and all those mental wellness things. And there is going to have to be a pushback at some point and a reconnection of the virtual world and the real world, because real needs don't disappear. And a lot of the conversation that we've had, when you start talking about those sort of virtual NFTs and the trading games and all the rest of it, it's very noisy on social media, but it is appealing to such a small segment of human society. You're talking about only the richest people in the richest nations in the world that are playing those games. Everyone else has real problems. And let's be honest, if we kind of look at the future, all futurism is Afrofuturism going forward. That's where the people are going to be. You have to remember that. So we've got real problems of, even if we sort of making our own problems. That's what humans love to do that. We love to make problems because then we can solve them and we can, create a business around solving the problems. That's what marketing is. You create a need and you get people to want your stuff. This is why we have diamonds and stockings and toothpaste. It's because we created the need for it, not because they necessarily were things that we required in order to survive. There's a huge distinction, but we have, at some point, those two things are going to spring back. And the tipping points there are the big companies investing in the real world once again.
Well,
that's what we should be watching.
Yeah, that's the question I would add to that, because you're really bringing up an interesting point, is do you see the VC pitch changing? Because the issue prior to COVID was scale. And I would argue now, with the acceleration of automation, crypto, and all these other kinds of robotics and so forth, is that there's much more of a consideration of how that can go wrong. And I don't think that, but it's incredibly difficult to pull back from automation in the context of COVID, because it works on some level. But at some point post-COVID, do we have a world that is humanless? Because it's easier and it's less risky for corporations to basically not invest in human beings as part of what they do. And how do you solve that part of the problem?
That is the sort of typical dystopia people speak of, and then they very quickly follow up and say we've all got to have a universal basic income, which is a very anti-human feature to me. I mean, I think that's a low bar utopia. It's one of my more controversial opinions, but I mean, like, we should be making a world where everyone has a value, not where you be telling people essentially you're so valueless you can only survive on a sort of handout from someone else. I'd personally be quite insulted if someone told me the only value I could have for society is nothing, so I must just make do with the handouts. And those sort of things are put forward quite a lot, but there are limits to what we can automate, but there's also very good reasons for automation. We should be always looking to automate cost centers and for things we don't want to do. This is not a new thing. Humans have been doing this since we invented the wheel. Like, we literally have invented everything that we've invented in order to make our lives easier. We don't automate things that we want to do. We automate things we don't want to do. And as long as we do that, that's fine. As long as we're automating cost centers and not value centers, it's fine. From a business case, once again, if you start automating value centers, if you start automating away the things that people like to do and the things that people actually like to buy, not grudge purchases, but the good stuff, you essentially automate yourself out of the value chain, because whatever can be automated can be replicated. And to use sort of a basic economics lesson model there, in a perfectly competitive market where supply meets demand, there's zero profit or margin in that marketplace. So a purely automated economy has no market or margin for anyone. Where the margin comes from is in more human needs being solved for real human people, which tends to be irrational stuff, which brings us back to things like NFTs and selling tweets and selling memes. None of that makes any sense unless you are a human being. Human beings like it because it gives us status, and irrational stuff, they're not buying it, for practical reasons. And most business actually solves, or most of the business that we have in our sort of very westernized, financialized worlds, is business of selling stuff to people that we don't actually need, which is not necessarily a bad thing, because we always find ways to do that. So if anyone tells you all the jobs are going to be automated away, just ask them what happened to sort of like, that meme cat that just sold for $500,000. No one needed that, but like, humans were going to buy it. This is why we have sort of trading economies, which is quite interesting. But at the same time, it can't be propped up purely on that. We have to be solving for actual human needs at any point in time too. And when we forget about the human piece in our organizations and we focus purely on the automation, what we eventually do is you sort of build a hollow house of cards that has to collapse. But that's what tends to happen with our economies. If you kind of look at the sort of 10-year kind of cycles, we sort of invest too much in the nonsense and not enough in the real world. There has to be a pullback, and we're sort of reaching another pullback stage right now, where unless we sort of build the real world up again, we're going to sort of run out of juice to support our imaginary economies that we have. So you always want to be a little bit ahead of the trend. I mean, the people that got in early on the sort of crypto rush, which is basically like the .com boom, but of our era, are going to do very, very well. But you have to know when to sort of exit the roller coaster and start betting on the other side, because those things can only separate so far before they become too top heavy. So, and like, if you look at sort of secular cycles of history, it's the same thing. When the elite class becomes too top heavy, it eventually kind of eats its own. If you pay your workers too little, no one's got any money to buy your stuff, but at the same time, you kind of want to build bigger businesses, but there's always going to be a pullback in these cycles. So always or not, it's and, it's not sort of either or that we've got to look at.
I guess that, those are the two words that I focus in on when I was sort of thinking about, and you were just talking about these 10-year cycles, is thinking about how investment is, what's the VC pitch and who's investing. And the two words are scale and sustainability. In the last 10 years, the way those words were used in an investment pitch were, scale was everything, almost to a blindness. And in sustainability was this sort of little dressing that you kind of did. And you sort of, yeah. And now it's tipped, as as you were saying. And so like the meaning of sustainability is so interwoven of whether or not you truly do have scale. Because there's a lot of, we have a lot of scaled social media that you just talk about. The balkanization of social media now is like has a lot to do with the scale issues in terms of how those technologies were actually working. So maybe we can, and I love the fact that you have in your futures cone the past, because we start looking at that hindsight differently. But we have to be honest with ourselves, as we thought that this was going to work out differently than it actually did. So we don't make the same mistake again.
I suppose just also on the sort of VC funding thing, I think like as you said, the switch from scale to sustainability is going to come back again, much like it did after the dot-com boom, and then things became more sustainable and they got more extraordinary again. We get those boom and bust sort of like 10, 20 year cycles. But the other switch that we're starting to see now, or at least the question that's shifting, is the shift from equity or versus debt. And I think this is an interesting sort of more macro trend, because it scales up on a continental level and also on a business level, and all the way down to an individual level. Because traditionally there's sort of two ways to fund a business, or to fund your own future as a student. If you're like getting into student debt right now, so you can take on debt, or you can get equity, so you can get investment. And what's interesting from a sort of behavioral economics perspective is that if you believe in yourself, if you believe you have a future, it makes more sense to take on debt. Because if you take on debt, there's only a fixed amount you have to pay back, and then you believe in yourself, so you know you're going to do very well. So that's the debt. Taking on debt is a good investment. However, if you're in it for the short haul and you just want to, get out, and you're actually not confident that you're making anything of value, equity makes a lot more sense, because with equity, you get the cash up front and you've got no obligation to pay it back. However, if you do very well, it can end up being quite expensive, because you can end up paying back many more times than was invested in you. And that's always the question with this whole VC funding model that we've seen. It's all been based on equity, which is really saying that all those founders don't even really believe in themselves, which is very interesting. They know they're selling a lot of hot air, but there's so much appetite out of greed, of people wanting that quick, big, next big bubble thing. The money is just piling in there. But when those returns aren't materializing, when investors start to realize that these people they're backing were just in it to get the quick cash in the front, you see that pendulum swings once again. And then investment funding becomes more scarce again, but debt becomes more of a requirement if you want to start something. And if you're taking on debt, you have to believe in yourself for the future. And from a sort of African perspective, again, that's the question we're faced with. We can get cheap Chinese debt, or we can get Indian and American equity funding. So if you're a corrupt politician, like sitting in my country right now, and you are in it for the short haul, it makes a lot of sense to, take the equity funding. So we're going to see a switch happening there too, because you only take on debt if you believe you can pay it back and then some. So I think that's another interesting sort of macro trend there in terms of how we're going to see the market shifts again. And I started to see a few op-eds picking up, because I've been on my radar. I'm like, this is going to shift at some point, because not all these unicorns are going to grow, and most of them look a little bit very dot-com boomy, a lot of the stuff where investment funding is following. So look out for the switch from equity funding to debt funding and bootstrapping once again, which comes back to the sustainability question, the resilience versus the efficiency and scale question.
One more question from the audience. Anyone want to add a question for Bronwyn? Nobody has any more questions. Well, thank you so much, Bronwyn. It was really marvelous, and I think you wrapped it up really nicely. So that you've given us a lot to think about and to bring into our work, especially as the students will be working on the sort of forecasting retail in the next few weeks, and sort of thinking about the knowns and unknowns of retail. So you've given a lot of really interesting big ideas for them to sort of insert into their work. Really, thank you very much.
Thank you. Thanks for inviting me.
Okay.
Can I add one question?
Oh yes, please add one question.
It's a very general question. How do you do research?
How do we do research? Well, we've got a network of trend spotters all around the world. So London side, US side, Oz, Africa, all the rest of it, that feed us a lot of information. We've also got a team of researchers at our office that do this sort of full time. And what we really try and do is and that's why you sort of start out with that whole sort of web thing. So you start to like look at any one of those sort of pillars, and you can really categorize any way you like. You don't have to categorize it in trends. You could categorize it based on regions or geography if you wanted to start with that. But it's important to have a few buckets to start out with, especially when you're starting with essentially like a blank slate and it's not something you've been doing for a long time in your life. You want to set out that sort of map, give yourself some buckets, because that trains your eye to look at different things in different places. And the first thing to do is to see what's interesting, what's new, what is something you've never heard of before. And maybe it's not a trend for someone else, but it's a trend for you. So you sort of write it down, you put it in your bucket, and you keep doing that until you sort of, and it doesn't happen quickly, but as you start to layer those things on top, over a few weeks, you'll be like, oh, wait, that's a pattern. There's something else here. I saw this last week, but this is also part of what's going on. So, you know, like you can say, oh, that kind of matches, that starts to tell a story. And the longer you keep doing it, the deeper you get going and the more those networks start to get connected. And that's just on the sort of more trend space, but also definitely encourage you, if you want to get good at starting to spot what changes are and what depths there are in things, is to start reading history. So like when I say reading history, I don't mean necessarily taking out a history book. I mean, read historical fiction. And I like to say that the best place to start is, particularly because we're only alive for a certain amount of time on this planet. The further back we go, the more sort of really macro stuff we see, but it's not necessarily useful for us today. But what is useful is the long now period, which is sort of like 100 years in the past, looking sort of 100 years into the future. So look at authors that are writing stuff in the 1920s right now, because you'll start to see what is still the same thing. How have people not changed? So that gives you like something to hang things onto. That's sort of like the macro cycle you want to look at. And when you start layering that historical context, that long now understanding of how people and societies and macro trends shift with news, that's new things that are happening, that are changing, you start to get a very good picture of what's going on. But start to set up your buckets. That would be my first piece of advice. And if you're a visual person, put together a Miro board or literally a whiteboard behind you and start to put down things that interest you, something that's new that you haven't heard of. And as you start to layer onto that, you'll start to see the connections. And ideally, don't work alone, because whatever you're looking at, you have a different worldview to the person sitting next to you. You want to work with people that see the world in different ways, that are noticing different things, which is why in our organization, we have people that look at geopolitics. We have people that look at, science and technology, that are able to pick out what's new in their field of depth. And then why our agency becomes useful is that we're able to tie those things together, because I might have a deep understanding of economics, but someone who's got a deep understanding of pop culture says, wait a minute, that connects. And that's how we start to spot things like the NFT story way before it starts to happen, and you start to see that, wait a minute, if you apply this model to that industry, things change dramatically. So spread the load, look for context, and set yourself up buckets in a way that makes sense. Whether you're doing country by country, break the world up into blocks like that, whether you're doing like our trends acronym, whatever it is, give your brain some space to develop those buckets. And then you'll start to see the connections pretty quickly.
Thank you so much.
Well, thank you very much, Bronwyn. We're going to continue class, but it was really great having you. And I'll share more of the information with the students after. If there's any other links you want to share with us, feel free. And I hope to connect in the future again. Thank you.
Yeah, absolutely. Thanks so much for inviting me. Have a great class.